Hey, welcome back. It's JWalter here. In today's video, I have a big update regarding the US housing market. I have an update for you regarding home prices, housing inventory, and mortgage rates because there's some pretty big changes here. In addition, I'm also going to share an update or announcement from the Federal Reserve regarding interest rates. So stay tuned for that because there's some pretty big announcements here. So let's go ahead and dive right into the video. And also, if you do get any value out of this video, then please hit the like button. So here's an update from Redfin. They just announced this on the 10th, the most recent housing stats that they have on their website at the time of this video. So here's the headline here. The housing market is worked into a frenzy, unfazed by war in the Ukraine, a faltering stock market. The stock market has been tanking, as you guys know, and fast rising gas prices. I haven't seen gas prices this high in Sacramento. Our gas prices are around $6 per gallon, which is absolutely insane. And according to Redfin, Deputy Chief Economist Taylor Marr, home buyers are in a frenzy. Buyers are reacting to changes in mortgage rates, but are so far unfazed by the war in Ukraine, stock market volatility, and rising oil prices. However, these risks are reaching levels that could be dangerous for our economy. And the Fed is on the cusp of raising rates further to cool inflation. So let's first talk about mortgage rates because I have a big update regarding that. So right now, the 30-year fixed rate mortgage on average in the US, according to the Mortgage News Daily, that's the Mortgage News Daily, a great website if you want to see daily fluctuations in rates. Right now, as of the 16th of March, rates are at 4.44%. As you guys all know, back in the beginning of August, rates were around 2.75%. So we're almost at an increase of 2% in just August. And we look at this chart here. This is the 5-year chart. Right now, we're at 4.44% for a 30-year fixed rate mortgage on average. At the beginning of this year, though, we were around 3.3%. So in a span of just over 3.5 months, we have increased our mortgage rates by about 1%, or actually over 1%. And the levels right now at 4.4%, we haven't seen interest rates this high since basically March of 2019. So we're at basically 3-year highs right now. In regards to the Federal Reserve announcement today, they announced that they were going to approve their first interest rate hike in more than 3 years. And they're going to see 6 more ahead this year. So the Fed approved a 0.25% rate hike, the first increase since December 2018. As you guys know, the Federal Reserve changes the federal funds rate, which is a short-term borrowing rate that banks charge each other to lend money overnight. This is tied loosely to mortgage rates. So even though the Fed is going to be increasing the federal funds rate, it doesn't necessarily mean that mortgage rates are going to be increasing. There is a loose connection though. In any case, they say that rate increases are coming at each of the remaining 6 meetings in 2022. So the Fed meets about 7 times per year, and each of these meetings, they could increase the federal funds rate, and they are anticipated to do so by about 0.25% for each meeting. And in doing so, they anticipate that the federal funds rate will be at 1.9% by year's end, and that is 1% higher than indicated in December during their last meeting. The committee sees 3 more hikes in 2023, then none the following year. The committee last raised rates in December 2018. So here's a document I pulled from the Federal Reserve's website. So here are their economic projections for the year, actually through 2024. So the Fed is forecasting that rates are going to increase to 1.9% by the end of 2022. But in their last meeting, which was in December, their projection was 0.9%. So they've increased that by 1% because inflation is at 7.9%. Inflation is not transitory. It's becoming more of a long-term issue. The Fed is recognizing that, and they're going to be increasing the rates more aggressively than they anticipated. In addition, I also found this interesting regarding inflation. So at their last meeting in December, the projection for the end of 2022 was 2.6%. Now they've increased it to 4.3%. In addition, their real GDP is also downgraded to 2.8%. Their previous projection was 4%. All right, so going back to this announcement from Redfin, this is for the 4-week period ending March 6th. This is the latest housing market stats that they have on their website right now. So the median home price was up 16% year over year to a new all-time record high of $369,000, and that's up 34% from the same time in 2020. And by the way, Redfin, Realtor.com, the National Association of Realtors, all takes different samples in order to come up with their median sold prices and all their stats. So for Redfin, they look at 400 plus US metro areas. So at least for these 400 plus US metro areas, we're reaching on average all-time record highs for home prices right now. In addition, the monthly mortgage payment on the median asking price rose slightly to a record high of $2,048 per month at the current 3.85% mortgage rate. Obviously, because mortgage rates have increased to 4.4%, this number is going to get blown out of the water to a new all-time high. In addition, new listings are down 1.4% compared to 1 year ago, and active listings, which is another word for housing inventory or housing supply, fell 24% year over year, dropping to a new all-time low of 456,000. And by the way, have a look at this because this is housing inventory according to Realtor.com. So they're stating that as of January, housing inventory was 408,000, meaning as of the end of January, there was 408,000 houses for sale. And now Redfin is saying that at least for the 4-week period ending March 6th, we're at all-time lows of 456,000. But have a look at this because even though these numbers are slightly different, this is pretty phenomenal here. So at the beginning of this pandemic or just before, we had 1 million houses for sale. Compare that to, let's say, March of 2019, we had 1.2 million. In March of 2018, we also had about 1.2 million. So over 1 million houses for sale at any given month prior to June 2020 through July 2016. So it goes to show how low our housing inventory is. And that's one reason why home prices are reaching all-time record highs. This is, of course, a huge problem. So here's a really good graphic on Redfin's website showing how the big increase of the median sold price in the US is. So at the start of this year, we really were on track with the last couple of years where home prices or home sold prices tend to decrease in the winter months. And then for whatever reason, home prices tend to increase in February. But have a look at this because in 2020, home prices increase, but not as greatly as 2021. And now we're setting up 2020 at home prices increasing at a greater rate compared to the last few years. However, I always say in this channel that this home price appreciation, of course, is not sustainable. Home prices cannot increase indefinitely. So at some point, this is going to have to cool off. And I'm guessing it's going to be from mortgage rates increasing so greatly. If they continue to increase, this has to slow down home price appreciation. So stay tuned for that. We'll have to see. And home buyer mortgage payments are up 22% year over year to $2,000 on average per month. When you look at the past few years, we're at levels well below $1,700 per month though. Pending home sales are up 3.4% year over year. This is pretty remarkable because we have a lack of housing supply. We're at all-time record lows, yet pending home sales, which is when a home seller accepts an offer from a home buyer, is up still 3.4%. So here's active listings or housing inventory down 24% year over year. Look at 2020. At this time, we were at about 900,000 houses for sale in the US, at least for these 400 plus US metros. In 2021, it was 600,000. Now we're at 456,000, down 23.9% year over year. And because we have this lack of supply, homes are selling very quickly. So 58% of pending sales that went under contract within 2 weeks. This is well below the past couple of years. I mean, have a look at 2020. In 2020, that number was less than 45%. Now we're at 58%. So 6 out of 10 houses are selling within 2 weeks in the US right now. In addition, about 4.5 out of 10 houses are selling within 1 week. That's 44.7%. compared to 40% in 2021. And in 2020, about 30%. So in 2 years, we went from 30% of the houses that went under contract within 1 week of hitting the market. Now it's 45%. And because of all this, houses are selling very quickly. On average, the days on the market is 25 days. This means that this is the time period when a home seller lists their houses for sale until when they accept an offer from a home buyer. So on average, it's 25 days. In the Sacramento area where I'm a real estate agent, as you guys know, our average days on the market is around 7 days. So very, very quickly here, very competitive market where I am. Let me know where you're seeing in your neck of the woods though. Any case, in 2022, 25 days. Last year, we're at about 35 days. And look at this, 2020, which is a little bit hard to compare this because in 2020 in March was really the beginning of this pandemic. So I'm not putting a whole lot of weight into 2020 when you compare it to the last couple of years. In addition, 46% of houses sold above their asking price. Compare that to 2021, it was about 35%. In addition, very few home sellers, believe it or not, are not decreasing their asking prices because there's such a high demand for houses right now. So only 3% of the listings had price drops compared to 2021. We had about just over 2%. And therefore, because home buyer demand is so strong right now, we have a lack of housing supply creating this big imbalance. Houses on average are selling for 1.1% over the seller's asking price. Compare that to 2021, it was less than 100%. So on average during this time last year, home sellers were selling their houses for slightly less than their asking price. So what are you seeing in your neck of the woods? Please comment below. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate it. And also check out that link below if you're looking for a real estate agent referral from virtually anywhere in the US. Hope you have an awesome day and look forward to seeing you on the next video.